All eyes on Amazon as the company gets ready to report its quarterly earnings this afternoon. So we'll get a glimpse of what will be on the top of most investor minds by talking to Tuna Amobi, equity analyst at CFRA. Tuna, great to speak with you today.
Thanks, Morgan. Good morning to you.
Good morning. So Prime membership growth, that's continued this quarter. We've got members spending about $1,200 and non-members spending roughly $500 annually. What is Amazon's plan for Prime? What's the ultimate goal here?
Obviously, I think the ultimate goal is continue to ramp up, Prime membership, especially internationally. We saw this past quarter, a very good example with the back-to-school sales, which was a very big catalyst for continued Prime growth. Worldwide orders up north of 60%. So I think the company is continuing to add lots of bells and whistles to the Prime membership to make it a lot more sticky and reduce churn and drive more new users as well as retention. For example, we saw Prime Music recently launched. That's another feature that I'm sure will appeal to certain types of users. So there's a whole lot of innovation and features enhancements that will make Prime much more compelling going forward.
Most definitely, and you mentioned back to school. We also had Prime Day in this quarter.
That's right. That's going to be the big driver for Q3, which otherwise is not relatively low quarter in terms of operating income. So we've seen them guide to 22% to 32% revenue growth range. We think they'll come in at the higher end of that range, in large part due to the success of the Prime Day.
And let's talk a little bit about the stock performance itself, because it has been a massive outperformer versus the broader S&P. It's up 40% year over year. It outpaced the broader markets in the last 3 months. How can this be sustained, and what will be the catalyst for shares to continue on this path?
Morgan, I think what we're seeing is investors get more comfortable with the business model, the investments that Amazon is making, fulfillment, content spending, devices. So it's been a very volatile, stock. But what we've seen in the last few quarters, they've communicated a more consistent message, and we're seeing the numbers respond. We're no longer seeing those deep levels of losses that we used to see a couple of years ago. And the big factor also to keep in mind is Amazon Web Services, which I would characterize as the gift that keeps on giving. We saw last quarter revenue growth north of 50%. We think that's sustainable. Margin expansion. All of that I think makes the whole business much more compelling.
What do you think is more likely to move the stock? Those results in cloud services and Amazon Web Services, or broader results and e-commerce numbers?
I think Amazon Web Services is always going to be a major highlight. Having said that, we've seen Amazon execute as well in their core electronics and general merchandise business. Last quarter, for example, they grew revenues, high 20s to low 30s percentage, both in the U.S. and North America. That's their core business. So as long as they keep delivering on that, and then you add the cherry on top with AWS, I think it's just going to be fine.
And given the fact that we're coming into the holiday season here, what are your expectations around that?
Well, I expect, obviously all eyes are going to be on how they execute this coming holiday season. They've already announced that they've hired north of 120,000 associates, which, believe it or not, is a major increase compared to last year. So they're always, looking to do things to make sure that their logistics infrastructure is going to be in shape. We expect them to have a pretty good, holiday season as well. They're doing a lot of things on the logistics, fulfillment, Prime Now, Prime Day, Amazon Fresh. All of these things I think will really see a major boost in this coming holiday. And there's no reason why we should expect them to not execute as they've proven that they can.
And in light of all of this, what do you see as the biggest headwind for Amazon? Is it the fact that they've been spending so much on that logistics and transportation network?
Well, the biggest headwind is going to be to maintain a balance in terms of their investment spending, whether it's content or fulfillment, et cetera. As you know, all of these things can be very volatile. And I might also add that the cloud infrastructure space that Amazon Web Services competes in has gotten a lot more competitive. We saw Microsoft report results the other day with a huge uplift in that business. So expect that competition to become more intense. That could be a potential risk factor if guys like Google and Microsoft begin to eat into AWS share in that segment, although we don't see that happening in the near term.
And real quick, just to wrap this up, where do you stand on the stock?
So we have current buy recommendation, our 12-month target price is $850. A little bit more upside from here, given the rally that you alluded to. We think there could be more upside if the Q3 results come in above expectations.
Great. Well, Tuna Amobi, thank you for joining us. Thank you for watching. I'm Morgan Brennan. Have a great day.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.